Okay, moving on to Realtor.com. They've got their October 2025 monthly housing market trend report. We don't always talk as much about single family, but housing is housing, and they both impact each other. Whether it's on the rental space, multifamily, single family owner occupied, single family rental, BTR. What we learned through the pandemic, really confirmed through the pandemic, is like housing demand is housing demand. The difference between like for rent for buy is typically on the margins. And there is a big marginal argument right now, given the lack of affordability in single family homes versus rentals, that probably is helping multifamily to a degree. But generally, I mean, if we look at it, it's not like multifamily is going gangbusters while single family is being weak. Same thing during the pandemic and COVID when interest rates were zero. It's not like we saw multifamily in the dumps while single family was rocking and rolling. They kind of move in lockstep. And so, like multifamily having a pretty weak year, single family homes are also having a pretty weak year. Would you have any, before we get into the report, Jay, just any kind of takeaways on the single family home market?
Well, and I can just speak specifically from me and my neighborhood.
Yeah.
Like, it was funny, we had a house 2021, cross the street, 2 houses down. It was bought, interestingly enough, by someone I went to high school with, but they bought it sight unseen from Nashville, moving back to Indianapolis.
Yeah.
And went gangbusters. The house next door went up back in September, listed for sale. As neighbors, we've all known it was going up for sale. They moved out a while ago, but it finally hit the market. It has sat. I don't think I've ever even seen a person tour that house.
Really? Wow.
And it's just sat there for going
on 60
on
days.
Do you think
their pricing expectation is too high?
I think their pricing expectation is too high, but the reality is it is still priced below what that house next door went for in 2021.
Really?
And so I see this kind of push and pull where it's like you said, the supply is down. I just think people are disenfranchised about the housing market. And if you don't have to move, why?
Yeah, well, we've had similar kind of personal conversations about looking at houses and personally moving, and I think we've had similar experiences of like every time our spouses have been like, hey, what do we think about moving? You pop on Zillow or Redfin, you start looking around, and you're like, there is nothing out there at a price point that makes sense that's compelling enough to make me sell my current house with a current mortgage at a relatively low rate to go through the whole process of moving. You get to a point where it's like it's just not an option.
No,
and like we're not even considering it. Do you have similar?
Similar thoughts. I mean, I know that like when my wife and I bought our house, we kind of saw it as like a starter house. Maybe like kids could be there. Like we had enough bedrooms that if we had kids, but we kind of thought like, hey, as we have kids, maybe we'd have a little more space, especially yard, something like that. And I mean, we look at what it would take to get what we want. It's like
a couple more deals later.
A couple more deals. But even then it's like, what's the risk return on that of like, I could do that, but then I'm going to increase my commute to work. Like, am I going to be able to use it? There's kind of all these other factors where it's like, stay here, go to the park, let them run around at the park, as opposed to like, hey,
it's working
1 to 2 acre yard in the backyard.
Yeah. And so it seems like so many people, I think, have come to a similar conclusion, whether they're in an apartment or whether they're in the home that they own or rent, they're just taking that idea of like moving and just they're putting it in part of their brain that they're not going to just revisit for a while.
Yeah.
I mean, it's just not an option. We're going to stay, and that's showing up in the numbers on our, like you mentioned earlier, our retention rates are, up, 100, 10 percentage points, over the last year. It's pretty interesting. Some of these takeaways in the summary from the Realtor.com report, the inventory climbs, but the growth is slowing. Active listings rose 15.3% year over year. Marking the 24th straight month of gain. So there is some inventory coming online. Regional divide has begun to narrow slightly. The buyer activity remains soft despite lower mortgage rates. I mean, I think, lower, they're still relatively high compared to the, pre-pandemic. Prices hold steady nationally, but fall in the South and the West. I think the fact that prices are still relatively stable, I think surprised a lot of people given where rates are, probably underlying some fundamental demand given demographics, but just it's tough because of the pricing. And then now this is interesting. The shutdown weighs on buyer confidence and housing activity in federal metros. I'm sure that's the case, in Washington D.C. and elsewhere. But I think that take the federal metros out. I just think in the shutdown, the federal government shutdown is just another factor that's adding to the uncertainty, and just that underlying uncertainty and low consumer confidence is leading people not wanting to make a big purchase. I mean, if you're concerned about your job, and if you think how many people are concerned that AI is going to take their job, whether it will or it won't? And do you want to go make a big home purchase when you're like, I don't know if there's going to be a recession. I don't know if I'm going to lose my job.
I mean, given who the largest employers, I was listening to a podcast a couple weeks ago where they talk about who the largest employers in the country are: Amazon, Walmart, and I forget who the other ones are. But it's like, okay, none of them are projecting necessarily cutting jobs, but most of them had like 5-year growth plans where it's like, okay, if we're not adding jobs, well, maybe they still are adding jobs, but as people are transitioning out. So it's like, do you want to make a decision where you're kind of on that
Yeah.
outsized thing? And I mean, as so many people are, even if they're not employed by Amazon, how many people are influenced by Amazon? I mean, we've looked at Northwest Arkansas before as a market. It's not something we're looking at now, but you look at that market, how much of that market is like Walmart. And I know part of it is like Walmart requires like any suppliers to have stuff in that area. So they actually are doing a good job to kind of drive that. But I mean,
Still, it's a lot of concentration.
That's a lot of concentration that all of a sudden, if anything's changed, that,
Yeah.
like you said,
I was listening to a Jay Parsons Bob Rent Roll podcast and commenting on some of the Q3 REIT earnings calls, and there was a quote. I forget which REIT, if it was Camden Property Trust or which REIT it was, but I want to say it was a very large percentage. I want to say about 20% of their residents worked for Amazon. I mean, it's a huge concentration. I mean, if we did an audit of our portfolio, there's a big chunk because how many Amazon fulfillment facilities are near some of our properties?
I was going to say, I can think of 2 specifically that are near Amazon and FedEx facilities that it's like when we bought them, that was kind of the thesis is those are the growing industries right now.
Yeah. Yeah. E-commerce and whether it's Amazon or other, but Amazon's got a lot. Yeah. Over on the east side and west side. I'm just going to go to one of these another chart, just looking at inventory of single family homes. And again, this is kind of similar to the list that we saw on RealPage with Austin and Denver supplying the most single family homes. And this is inventory recovery from the spring to fall, May versus October 2025. So it's kind of just the movement in inventory relative to the percent above pre-pandemic levels. And so, there's a decent amount of markets, call it, a third that are above pre-pandemic levels. The West has the highest average of, inventory that's coming on, recovering above pre-pandemic levels. The Northeast is seeing some of the slower growth and followed by the Midwest. But again, I think a lot of this is kind of in the belly of the curve, more or less. But again, I think it just highlights some of these high growth markets that are experiencing a lot of population growth, a lot of employment growth. But this picture, when I see Denver, Austin, San Antonio, Seattle, Dallas, San Francisco, Tampa, Orlando, Nashville, San Jose, Phoenix, Tucson, there's so many of these markets which are experiencing slow negative rent growth. Again, this is just a lot of housing inventory. We know there's a lot of multifamily housing inventory that's going into these same markets. I don't see them having a rent recovery in the immediate future. At some point, it'll all catch up, but they're still building a lot of houses, a lot of apartments.
And I think that, like, to your point, it's interesting because, like, when I look at this, these are also what I think of as like your quote unquote destination cities as well. And like you said, I'm sitting here like looking at Tampa, and it's like that seems like that should be where people want to go. And I realize there's been a lot of development down there, but then you also see in the news about how Florida's pricing people out, and maybe people don't feel as good about being in Tampa anymore.
Yeah, I've heard some anecdotes of there's some recovery going on in Tampa, but definitely struggling with a lot of inventory. But this list, go back to the Real Page report of the markets with the deepest rent cuts. I mean, this is like a list of the markets that were like the top investor markets, top syndicator and
As
institutional
if you
investment
if you were a
markets.
developer and you didn't have a deal going up in one of these markets,
Are
what were you even
you,
doing?
yeah, are you really a national developer if you weren't developing in one of these markets? And so it's just part of me. I'd say I have a lot of mixed feelings. On one hand, I'm like, okay, well, we're in a much better region, partially just because luck. That's where we are. That's where we're based, and we just double down on that. But does this remove investors from the market because there's gonna be a lot of losses because a lot of these markets were overly invested in? Does that shift some investment to other regions? Any take on, I guess, just investment preferences and some of these have been just steadfast stalwarts of the multifamily investment thesis for a
I
lot of investors.
I think that what is the crux of these is what are the banks going to do? And what do these owners and developers have the capability of doing? Because the reality is, if you developed in here, maybe you got lucky, maybe you got out. But if you're holding it right now, you're not looking at the prospect of making a lot of money. So, are you just trying to get out? And you're willing to take a loss, do whatever? Are you just trying to get out? Are you willing to hold it and try to weather and just understand it's going to be a low return, but I'm not losing money? Is the bank going to take it over? Like, are you in that bad of shape? And so I think my thought on the sentiment of these is like, what is the concentration of that? Like, if bank takes a lot of stuff, Phoenix is the one that kind of is sticking out in my head of like vastly overdeveloped, low rent growth, like lots of supply, definitely not hitting their rent projections. We've
Mm-hmm.
heard lots of stories about syndicators in the Phoenix area, and
Yeah.
that's the one that sticks out in my head of like what's happening there.
The
Like,
challenge is the banks. Not only do they not want to take over the keys because they're not good asset managers. I was talking to a banker recently, and they also they don't have loans to replace them with, and so if they foreclose and that comes off their book, they don't have that book of business anymore, and all of a sudden, they don't they their cash levels are going up, and they need to
deploy.
they need to deploy that cash to create revenue, but there aren't the deals to deploy into, especially the regional banks that typically fund development deals. And so the banks often, I think, are putting their head in the sand, and they're just like, tell us when it's over and tell us when you can give us our money back. But until then, we don't really want to know what's going on. And that's fine if we have to modify a few things, we can at least keep it on our books and we have a plan.
And that's where I see a lot of these because I mean, you would have told me 3 years ago I could buy in Nashville, I could do all that, and the reality is, I could try to go to Nashville right now, and if I can almost guarantee if I went to talk to a broker, I would still scoff at the price they tell me that it would take to get into Nashville.
Yeah, you'd still pay a relatively low cap rate. Even if you paid a six cap, again, underwrite even a six cap with negative rent growth. It doesn't work.
Yeah.
And the numbers don't work, even if you have positive rent growth by year 2 or year 3, which may be overly optimistic. You really have to be betting on something you just have to be just ignoring a lot of the data and just saying, hey, we're going to figure it out, and there's going to be some rent growth, or somebody's going to pay a insane price because I'm just purely focused on the basis.